Okay, perfect. Over to you, Anthony.
So hello, everyone. I'm Anthony Rose, founder and CEO at SeedLegals. I think many people know SeedLegals, the legals to help you do your funding round. But my goal is not just to be there for taking your money and helping you with your investment. It's to go well beyond that and help you on things that we've got no monetary advantage to do. So whether it's on sales or marketing and all the things to grow your business, if we can help, that's awesome. And today I'm here to share my personal experiences over many startups on helping you get to a beta and beyond so that you don't make the mistakes that I made. So firstly, by the way, you're welcome to turn it into in the view mode, set speaker view, so you get to see my more arm waving, or stay on grid view if you like. And then the format, they said 10 minutes. I missed the brief on that. One of the things with founders is never listen to what people tell you to do. I was planning to talk for more like 25 minutes, but pop questions in. And I'm going to do this firstly with a few slides to share, and then arm waving where I've made a list of items. And if you have any things that you'd like me to talk about, let's do that. So let me start with the screen sharing piece. So welcome to From Idea to Beta and Beyond. So many years ago, I used to head up BBC iPlayer, work with a big team. Beta there was not really an option. You know, we've got 2 million people who are going to use our product in the morning. It better bloody work. So, but as a startup, you can avoid all of that and be scrappy. And that's what we're going to talk about. Then I built a company, sold it, built a company, sold it, got invested in a few, got tired of paying lawyers, and built SeedLegals to change that. And in each case, they had different variants of what is a beta, fake it till you make it. And we'll go through some of those. So to start right at the beginning, as founders, you have gone running, you've been in the shower, whatever, you've had an idea. And you've done some user testing, and you've realized that ideas are cheap. You know, spending a few years of your life and raising investor money and getting people to join you is expensive. So you've gone off and you've done the mom test, you've asked users questions, you've done your research, and you've determined that it really is a good idea. And at that point, this is where we pick up the story here. So you've built something, and for the purpose of this, we're going to call it the beta. So what is a beta? How long should you have a beta for? Should you call it a beta in the first place? So really what a beta is to me, it's something you release where you're flagging to users it may not work that well. And the pact is the user will try it out and they will expect you to offer extra support. It's going to be free, or they're going to pay for it as usual, but they're going to excuse things because you put it as a beta. And some users will avoid it, and some will use it. And depending on the type of thing it is, people will excuse the beta-ness more or less than others. So if Barclays launches a new bank service called Beta and it just doesn't do my payroll at the end of the month, that's not very good. But if you launch a social media app and the follow button doesn't work, nobody's going to care. So the next thing is, so what you want to do is you want to get your product in front of people sooner rather than later. And probably if you think it's going to have issues, put the word beta on it. People treat it, not that it's bad, but actually that they're there to help you. Don't expect them that they're going to use it as if it's a fully fledged app. That's the signaling for beta. So how long should you call it a beta? Google famously keep products in beta for like 7 years. But I reckon labeling it for a few weeks until you've got some feedback and it's got some minimum viable set of things that it's doing is good. And then you want to remove the beta label. The beta label comes at a cost. From what I've seen, if you want an app in the Apple App Store, if you have the word beta on it, they'll bounce it and go, call us back when it's no longer a beta. And you'll have users more reticent to use it if it's got the word beta on it. But the signaling is really the gamification of it so that the user knows to give you nice feedback rather than criticizing it when it doesn't work. And you'll often have people respond going, yeah, it's only a beta, that's fine. All right. So the purpose of the beta is to really establish that the idea you've had, that you've done the mom test, you've done user testing on, is really what people want, before you spend massive amounts of time building the rest of it. So how can you get it in front of real users in order to do it? Now, you might also use beta to create that fear of missing out and a program with a wait list and so on, and we'll get to that in a few moments. Now, the next thing is, when you get to create your beta, usually what happens as a founder is you're very proud of what you do, and you've got all these problems to solve, and you love solving technical problems. You love building stuff. I know I do. And so you keep thinking you're going to be embarrassed with this half-baked thing. But actually, there's a good phrase to keep in mind, which is, if you're not embarrassed when you launch your beta, you've left it too late. So in your mind, and this is really key to everything we're going to talk about now, which is you think you want all these things are needed before you let anybody use it. But the reality is you're building all this extra stuff that probably nobody wants. You're building things that are in your mind what the audience wants, but they might want something completely different. So how do you learn as quickly as possible what they really want? And to flip your thinking from it needs to be perfection to it needs to be something minimum that gives value and excites people. And if it's a social thing, has them want to build their friends, call their friends and so on. So if you're not embarrassed, it's not too late. Now, what many founders do is they dramatically overcomplicate things. They think of all the use cases that might have to be covered before they will ship it. But actually, you can solve a very simple use case and just get it out. And I like the SeedLegals analogy. So famously, when I met my business partner, Laurent, at a party, he was saying, lawyers, they take forever, we should change it. I said, great, let's get together. And then he told me he'd been working on this idea for 6 months, and he'd done some work and he'd send it to me. And he sent me a 49,000-line spreadsheet where he'd analyzed the articles and Shell's agreement, and he'd gone crazy on it. And he said, can you build it? We need to launch this. And I went, well, there are two problems. One, it's insanely complicated. I can never build it. And two, if I build it, no one would ever be able to use it. It's too complicated. So I got rid of an admission, in case Laurent's listening. Most of the things that he'd specified, came up with the minimum set and said, let's get this live. And if anyone asks for any of these other features, we'll go build it then. And some features people ask for immediately, but some features, like 3 years into SeedLegals, where we've done 500 funding rounds before anyone asked for the feature. So your goal is to get something simple out quickly. So you launch fast, get feedback. Now, you might be thinking, well, I need to build more things and wait until later. But I always think of it like this. If you look at time and the number of users, it doesn't go from 0 to millions immediately. The curve goes up slowly. So the sooner you start that curve, the more users you'll have. If you wait, you're in an echo chamber of yourself and your own team. You really want to get it out to users. So now comes I want to open the front doors and get people in. And here, one of the things is you need to fake it till you make it. So what you want to do is you want to establish that people really want your products. The difference between the £20,000 you've put into it so far, or £200,000, and one day the millions that you put into it later, is going to be all the back-end scalability, GDPR, data protection, security, all that stuff's going to come later. You want the minimum to let people see, do they really want it? Because you mustn't waste your time building the rest of it until you validated that. So the fake it till you make it, famously with Terras, but you want to do the proper way. And here, the SeedLegals analogy is we could have built huge amounts of complicated stuff to automate all the documents, and we have built it. But at the time we launched, we kind of made the web form that had you fill in all the deal terms, but the platform couldn't render the documents. Instead, our legal team, which was like one person, would manically be in Word building the deal doc, screaming, "Anthony, please build the proper thing, it will kill me." So then we could see the questions that people were really wanting to answer, the deal terms they're selecting, and we could deliver the service manually until we were able to automate it. And this is one of the key things that I see companies focused on scalability way too early, on AI that's totally not needed, on building all sorts of supporting infrastructure that just isn't needed. And let me jump in on a couple of these, because a couple of startups ago, I had investors invest lots of money in my business, and they wanted massive scalability, and they insisted it would have like 100,000 concurrent users. Now, you might be worried, whatever app you've got, what happens if there are thousands of users? And the answer is it'll probably crash at some point. But do you need to solve that problem before your beta? Well, if you're on Product Hunt, and we'll get to that in a few moments, and you literally can have lots and lots of users, or you hope so, you want to make sure it's not going to fall over too obviously. But otherwise, you should kick down the road all the big service scalability pieces. All the service scalability issues, kick down the road. Don't worry about it for beta. You'll get to it later. Multi-zone support and all these, you don't need it either. The other thing is AI. So AI, you often put that on your slide deck to entice investors. And at first glance, it sounds enticing. But actually, from an investor point of view, I see AI as a net negative. Because instead of just solving a problem of connecting a user with something, you are spending all this extra time on a much more generic solution designed for when you've got millions of users. So let me give you an example. Let's say you have an app that's going to connect people with photographers around the country. So you might say, we use AI, we ask you a set of questions, we work out the DNA match between the user and the photographer around the country, and then AI matches their scheduling and pricing and meets you. That's a lot of cool stuff to build. But imagine your beta was just a nice web page saying, I'm looking to hire a photographer, you know, wedding, bar mitzvah, family thing, whatever, what's your postcode? And then you have a little Excel spreadsheet or an Airtable or something with a list of 50 photographers, and you just look them up. And now you've skipped months of development, and better, you've worked out how to deliver a service based on what people really want, rather than building all this AI stuff that may be irrelevant completely. And I like to think almost with Netflix, they started with this, you know, fancy recommendation engine. And as it's moved along, the fancy recommendation engine got smaller and smaller. They just put the hits that they want you to see or their own commissions at the top. So all this work on supporting infrastructure, ditch it for the beta. So the next one now is we're going to switch tack on how to find users. So your beta, let's go back to why you want it and what it is. So one version of it is you want to get some real people trying it out. And for this, you need a small number of people who are really going to give you feedback. But you may also leverage it as a fear of missing out, a marketing campaign, a wait list, a wish list, to, instead of trying to get growth slowly, get a big backlog of people who then going to hop in. And whether it be Clubhouse, or Superhuman or other apps, they've managed to do that wait list very effectively. And we all aspire to that, but of course it works for some type of things more than others. And I think if you want to go for that fear of missing out wait list, big, open the door and crowds rush in, you're going to have to work really, really hard to manufacture that demand. And if that's you, if you've got a big social following, if you know how to work the crowd, by all means do it. One of the questions I get asked frequently is, should you collect email addresses up front? Should you only allow a small number of people in? Or should you just open the door and let anyone come in? And I don't know the answer. I've done both. I think on SeedLegals, it didn't make sense to go join our wait list. It made much more sense to go, if you're looking to do a funding round, come on. But in other cases, it makes sense to, particularly if it's a viral social app where it doesn't really work. If you've got 10 people, you want to have a lot more. Can you manufacture that demand? And one of the great ways of manufacturing demand is Product Hunt. So I'm guessing most of you have heard of Product Hunt, have gone on Product Hunt. I don't know how many have actually put your products on Product Hunt, but it's a great exercise and I really encourage it. And the first 2 or 3 times you do it, it probably won't work that well, but here's what to do to try and get it to work best. So Product Hunt has got tons of traffic, and your goal is to get hunted by others to push it right up their leaderboard. So if you can make it in the top 10 or whatever it is on a given day, you start getting quite a lot of traffic. Now, the challenge is to make it up the leaderboard. And so what you do is you probably ask all of your friends, everyone you know, hey, please hunt me, and go on Product Hunt and upvote it. The problem is Product Hunt, people know that. And if they see lots of people who've signed up to Product Hunt 3 minutes ago and then hunted your product, they will go and hunt you down and see how they did that. And they'll look at the IP address to see if it's from your office. And if they see that you've told people to go and hunt it, then you'll get removed from the leaderboard. So you want to do this more subtly. You want to get as many people as you can. Perhaps 100 people to hunt you will get you on the leaderboard. Get them to sign up on Product Hunt days beforehand. Go, upvote a few other things to be incognito, and then go hunt yours. And Product Hunt not only is a great way to get traction for your product, but it's a great way to get feedback. People ask you all sorts of questions, and you learn really quickly that the messaging you had for people isn't what people understand at all. On SeedLegals, like, oh, great, you find investors. Oh, shit, where did people think we found investors? We don't quickly change the wording. So, and it's also a great way to focus your team on a launch event and all the things that go with it. But also the other thing to do is to spend time on Product Hunt and look at what other people are doing, the way the founders hop in and they're interactive. It's the founder talking to the users, which takes me to my next point, which is a beta is really not about launch it and hope people go to your website. The point is it doesn't work that well at that point. So you want to make it an interactive conversation. You want to be talking to your customers rather than them having a lousy time. You want to be engaging with them so they talk to you and don't post on Twitter that your product isn't working. And to do that, that's where some of the Product Hunt conversations come in. You can see it happening in the threads. But we use intercom, web chat on SeedLegals, and it means everything is a conversation with our team. And I can't imagine now running a business any other way. So intercom, when you've got thousands of users, gets quite expensive. But if you've got a small number of people, you can start using intercom for very little, I'm not even sure, maybe even no cost. So put the intercom chat bubble or an equivalent on your website and turn every visit into a conversation where you can start as soon as someone arrives. It's like being at a tech day stand or something. Someone's come, quick, talk to them, make sure they don't leave, learn what they really want, and then adapt the product for that. So let me now pause, do some Q&A, and then I'll get back to some of the topics that the Hotbed team put in the event. And Hotbed team, have I exceeded my time or can I keep going?
Oh, you can absolutely keep going.
All right. Okay, cool. So do you want to read out some questions so I can look at the camera?
Sure. Can you talk a little bit around feature creep and when it's a good idea to expand your initial scope or when you should just stick to the plan?
You've asked the billion-dollar question, and the very next
well, it's
thing
from Jason. No.
All right, nice one, Jason. So this is actually the biggest stress point for a founder, and I've been there and done that. So what happens is, you've done your pitch deck for investors, you showed your 5-year growth, you show the traction going, you launch your beta, you open the doors, and like 3 people come. And now your big problem is, are you just one feature away from millions coming, or have you bet completely wrongly? And the problem is, in your Trello backlog, you've no doubt made this big list of features. You've decided not to wait forever to get it out the door sooner. and you've got some number of users, and the users are telling you, I would love it if it did X. Hey, Anthony, I'd love if SeedLegals worked in Malaysia. So great, should I stop everything and make it work in Malaysia? Or so you're going to get all sorts of feedback. And now the question is, should you go chasing features? Some of them are things users are asking. Some of them are things on your backlog. Or maybe you've just bet in completely the wrong direction and adding features is the wrong way to go. So let me just expand on that. So when you have a startup and you're either putting your own money into it or you've raised investor money, the way I like to think of it is at one point you'll have revenue and be profitable, hopefully. And at that point, there's not a time imperative. But until then, assuming you're paying people, you've got a monthly burn rate. So you've only got a finite time to live, so to speak, before your money runs out. And that means everything you do is a bet. So now you've opened the doors and your users are asking you some things. You might want to do some things. Traction might be, in the best case, it's at least as good as you want and exceeding it. But in the worst case, traction's a bit meh. And now you have to figure out what to do. And here I like to think about as rolling the dice. And at each roll of the dice, you're putting some money of your remaining stack of money onto this bet that you're making. And it may turn out that you can make 6 small bets before you run out of money, or you can make 1 or 2 big bets before you run out of money. And which should you do? And this can be the most stressful time, because sometimes you kind of know the answer. Hey, we bet on this, it's not working, we're going to change to that. But sometimes you just don't know the answer. And it can get quite stressful with you and your team. Your CTO thinks they need to make the page load times faster, and your marketing person thinks they need to redo everything and have a different feature set. And you think the mission and purpose is here, but it hasn't quite been hit. And should you change the colors and make a dark mode or add a new, what do you pick? And obviously, the mileage is going to vary each time. But I think it's definitely the class of thing that tests relationships. And I think if you keep in your mind I can make some number of small bets or a smaller number of big bets, and now at what point do you determine, you might say, I'm going to make 3 small bets to test hypotheses very quickly. And the small bets should be, what is something I can do in the next few days to get a result that will indicate that I'm going in the right direction or not? Is it adding this new feature? How can you reach out to users on web chat or whatever to learn whether this feature would really make a difference to them? How can you make sort of a simple version of the new feature to see if people are clicking it? Because it may turn out you're doing this work and it's not really moving the needle at all. Or it may turn out, if you think about your high school math days, local minima and maxima, maybe you're in the space of a curve and you're just going a little bit further up the curve, but you're missing the next mountain where you could be much higher, and you're spending all the time optimizing here and not being there. And maybe a SeedLegals example, I'm doing all this great stuff with funding rounds. Maybe I should do a whole thing in crypto and not spend any time on a Series A round automation. I should do a crypto thing. Or maybe that's a truly terrible idea and I shouldn't do it. And the problem is, you have no one really to ask. You can ask your co-founder, you can ask your team. If you ask your team, you'll probably confuse them completely. If I go, hey team, I'm thinking of stopping everything and making SeedLegals for crypto, they'll look at me like, Anthony, have you lost the plot? We've got a business to run. Can we get back to proper things, please? So you want to keep in your head all these different scenarios, and then you want to share with your co-founders and, as makes sense, with your team, the various hypotheses. And just to wrap up this, I think usually the one that is most enticing, but actually least important and least useful, is adding another feature. And often it's about showing people that what you've got is a solution to a problem that they have. And you're busy adding features, but you're not explaining why you're a solution. So I'd always start by looking over there. All right, next question.
All right. 2 really good questions here. When should you consider offering a discount code or free trial for a SaaS product? And then for an app, do you consider a customer someone who has downloaded the app or someone who has downloaded and paid to use it?
Great questions. Okay, so on the discounts, I mean, mileage is going to vary, but I think obviously offering a discount is an enticement. The question is, are you offering the discount as an always-on marketing strategy, or are you offering the discount for being a beta tester? I think if it's a beta tester, you might consider giving it for free. But you've got really two challenges, or a few challenges. One, if your service isn't really operational, you don't really want to charge people. And if you charge people, they're going to be insistent on a great service. So giving it for free, I think, is great. Hey, you're a beta tester. It's on me. If it doesn't work, it's not, we both know you'll put up with a bit more. Sorry about that. You might do a discount. The problem is you also have a proof point for investors to show them how many people would pay for your product. And if you're giving the product away for free, it's great for potentially getting more users. But when you get to talk to your investors, they're going to go, I've seen that you've established that you can give the products away for free. Can you show me that you can get people to pay for it? So the worst case is that you do your next set of investor meetings, and then it's back to the drawing board to go start charging people for users so that you can go back to investors and show that they will, users will pay. Can you remind me the second part of the question?
The second part of the question was the who's considered a customer versus the user.
Right. So again, I think who's the customer and the user? I think there are two proof points. One for yourself, which is there someone who would not really be a user in the fullness of time, and therefore you're kidding yourself that they're just browsing? And secondly, for investors, they're going to want to drill down and see if this is a real user. So let's talk about metrics quickly and vanity metrics. So metrics go kind of like this, which is if you've got revenue that's growing month on month, show revenue growth. That's what gets investors excited. But of course, at the beginning, you don't have revenue. No problem. Show users and user growth. Great, but you don't have that either. All right, show website visitors. Great, and they're not converted yet. You don't have website visitors. Show engagement. You've only 3 people, but they engaged for 15 minutes last week and 7 minutes the week before. It's going well. So really what you want to do is to entice investors and to see which direction you should take the product. You really want to be focused on metrics. And we've had our seed sprint sessions before focused on metrics. Some of those videos might still be available. And you want to now be fixated on whatever the best set of metrics you can get. And then the challenge, of course, is if you are creating, well, firstly, in your mind, you should not drink your own Kool-Aid. And if you don't have revenue and don't have users and you're relying on website visitors, it's nice as an enticement, and it's nice as an ego feel good. Hey, our website visitors are up. But you know in your heart of hearts that those are just random people who've clicked on your LinkedIn post, who've seen an article here, some influencers tweeted something, and they've arrived at your site, looked at it and went, no idea what you're doing, and left. So you want to look at the bounce rate and essentially, honestly, because it's for yourself, you want to see what that relates to becoming real users later. And then in the meantime, you want to see how to leverage that for your investors to show traction, but don't lose sight of the fact that vanity metrics, firstly, the astute investor will know their vanity metrics, which then takes me to app downloads. So what I would like to see, and any astute investor would like to see, is, for example, if it's a social app, how many monthly active users, or how many posts, or how many readers, or something like that. They want to see ongoing engagement. If you show, because you don't yet have engagement, if you show app downloads is a double-edged sword. Because if you show me that you've got 50,000 app downloads, amazing, I'm excited. But if I go to App Annie, because I love doing my own research, and I see you had 50,000 downloads from Product Hunt 2 months ago, and actually 3% retention rate, and you've got 200 people using your app today, that's a big negative. So always assume that your investor will do their research. And of course, always don't kid yourself with vanity metrics. 50,000 app downloads is good. I mean, it is good. It's very impressive for an app. But if those are not translating into real users, you might find yourself worse off by mentioning it, because questions will be asked about why they're not real users. And then you'll have to explain, it was just product hunt. They came in from around the world, but our product only really works in the UK. So I had all these downloads and they couldn't use it, but it's okay. The UK ones are retained. All right, next question.
All right, we have a few longer questions. So if I call on you and you want to chat, then please take yourself off mute and you're welcome to give a bit more context on your question. Okay, so Julian Harris, he said, Julian, are you here? Are you ready to hop on? Okay, thumbs up from you. Go ahead.
Yeah, cool. So it's around freemium. I think freemium is a really interesting strategy. And so my points really are, here's my approach by default, which is I use the beta to identify those users who are particularly highly engaged and see what kinds of features they particularly value. And then basically cordon off those features as premium features. The idea in my mind is we have a segmentation of users who are engaged at some basic level. In my case, it's a way to be able to take notes hands-free using just your voice for podcasts and other audio. And so I'm assuming that it's going to be a bunch of people who will be able to, peruse and listen to the odd podcast or web page. But there's going to be some users who are like doing X hours a week and they're taking notes of this length and things. And so to me, there's going to be a threshold that says, yeah, you can listen, or you can have this amount of data in this shape, but apart from that, okay, you look like a premium user. So I'm really interested in your experience around effective transitions from freemium customer acquisition channel through to people who are paying.
It's a really, really great question. And this is one of the challenges with betas, for example. If you give things away for free or you're trying to establish your business model, you may find yourself with a great deal of traction, but unable to monetize it. And then you put up a paywall and then everyone disappears. So that was a bit binary, a bit abrupt. What can you do to leverage this? And obviously, I don't know the answer in this case, but it sounds like you've thought it through carefully. You've probably got a few hypotheses. It might be that the most active users will pay for something, the rest won't pay. It might be that it's not about the activity, it's some feature that you need that everyone is talking about. I love the discussion with Twitter that people would pay for an edit button. I must say, to me, it seems like an idiot thing to pay for, because it's a hateful thing to pay for. I have to give you like $1 so that I can edit my tweet. That's the opposite of making me want to love your service. So I don't know the answer, but the key thing is to create those segmentation models and then try it out. There are also some theories on seeing how much people will pay by posing questions. Would you pay $5, $10, $20, or whatever it is, and you establish the price point which people see value in your service or not, and then you can figure out where to go. The challenge, of course, if you just ask people, would you pay for the service, then you may get the answer you don't want, which is I'd love to use it and I want it to be free. But if you ask the right questions and you can do some Googling, I just forget what the model is. The
Ben Westendorp. So
that's right, the Westendorp model, yeah.
Yeah, Ben Westendorp's a great model for people to try out, and you ask a series of questions like, what's too expensive, what seems to be a bargain, what seems to be too cheap. And for those, there's the cheapest tool for that I'll share in the chat. I found a really cheap tool for doing this because it used to be a premium research feature, but Ben Westendorp's the way I've used that with some people already in my prototype stage. So I've got a benchmark for pricing, but I think what you're alluding to there, Anthony, was interesting too, which is the difference between behavior and attitude. And I'm obsessing about behavior, which really gets me in a bind when I don't have a product that people actually pay for.
All right, so Hotbed team, I think we've signed up our next lecturer for pricing models. So welcome, Julian. All right, thanks, Julian. And that Von Westendorp model is the one. All right, thank you.
Next question is from Honk. And he's asking the question that we've got the entire 4-week program to answer. It's a big question. What metrics to track for a SaaS product during your beta testing for future product development and future funding rounds? If you want to take yourself off mute and add a bit more context, you're welcome to.
Hi. Hello, this is me.
Hi.
Actually, we very early, so like I want to see like what metric should we track since like day one. We have started doing software for architects, so quite specific, like niche in the market. Yes, thank you.
All right, an exceedingly good point. And one of the challenges is when you ask your team, they'll come up with 73 different things that are worth tracking. You know, we see this is going to be answered by many people over the coming weeks. But it's been said that the way to do this is to find your one key metric. What's going to be success for your business? And that's the metric to focus on. So it might be, it was said in Facebook, for example, that it's when you have 6 friends, then it's going to be taking off. Or maybe it's people become retained users once they've made 3 posts. Or it might be, you know, maybe on SeedLegals, if you've done an advance assurance, then you're likely to do a funding round. It's not actually that, but hypothetically, it might be. So think about what is actually success for your business. And now you want your team to be fixated on that. And pretty much everything else is either ancillary to get there, or it's a vanity metric. It's nice that there are more website visitors, but website visitors don't change anything. It's that they click the login button, or they buy a button, or they buy one of these, or they do, if it's freemium or free, they're doing certain behaviors that turn them into engaged users. And you won't know the answer to that on day one. And that's where using Google Analytics or other data tracking, and then you're going to have some fun in the evenings, poring over the data to try and figure out some pattern. And of course, brainstorming with your team to make it a fun thing like, hey team, which things jump out as being retained users? And if you figure out those, then how can you amplify those? And then one day you can figure out how to monetize them as well.
Thank you. Thank you so much.
Thank you.
Anthony, did you say you had more slides, or shall we continue with Q&A?
No, we can.
Okay, perfect. We've got a lot of questions. All right, Ajit, do you want to go next? Okay, I'll just jump into your question. For B2C fintech businesses, what are some good ways to acquire initial cohorts of beta users?
Excellent question, and quite relevant for us at SeedLegals. So I think, you know, to me, if you can have a business that is targeting a set of customers who hang out in a defined space and perhaps talk to each other, but an addressable market, then things are much easier than if it's dispersed. So if your business is trying to pick out of 1 million UK companies that you're going to do, you know, their payroll or something, it's really difficult to pick 1% out of millions. But if you picked, I'm looking for people that are freelance web developers, well, you start by, where do freelance web developers hang out? What content are they looking for? What will come up in Google search results? How might you help them? What features do they want, or whatever it might be? So if you're lucky enough to figure out that your product has a particular addressable audience, and here obviously I don't know the answer, and obviously it's going to be vastly different between each, then how might you find that wherever that audience goes, you're popping up everywhere? And here you want to, there are free methods and there are paid methods. So let's start with the free methods. And the favorite one for me is always content marketing. You know, frequently people tell us, hey, Anthony, love your articles. SeedLegals, lots of articles that started with an intentional, I don't want to pay Google, I don't want to pay Facebook, can I write articles on it? And then you become obsessed with it, and you want to become a thought leader, and you have views. And if you write an article, it means that people don't have to ask the same question, it can be answered with an article. And so that becomes self-fulfilling, where people hub around the content you've got. And a great example is a SeedLegals customer selling green tea. I always love to buy things, particularly edible or drinkable, from our customers. And I was looking at their website, and they have very nice green tea, but I was going, there's no content. Had they had articles on the perfect temperature for the water and where it's, harvested and the best times of the year, whatever it is, to establish that they're experts. So thing one, content. Work with yourself, your team to create content that your audience might want. And that takes time, but there's no cost. And also when investors start Googling you, instead of coming up with nothing other than your homepage and other companies, random stuff, it starts finding your articles. And then you can put them on social networks and other places. So you're creating this, you're much bigger than you really are with the content that's floating around. At the other end of the scale, of course, you have to buy pay-per-click ads and things like that. But your challenge is, unless there's a lifetime value, in other words, customers are generating revenue for you, if you're paying per customer, your customer acquisition cost is greater than your lifetime value, CAC is greater than LTV, you'll learn, then you're going to run out of money unless you keep fundraising. And this is a real problem. And I'll spend a moment on this because you have the beta, you open the door, and like 8 people come. And you go, oh, all right, we'll raise money to buy Facebook ads. And it's enticing. And you may persuade yourself, well, I'll just spend a few £100 on it just to prime the pump. And there may be no other way to get traffic. But the problem is, if you are just spending money and particularly giving it to Facebook, the money's gone. And you either have to raise more, or if you don't raise more, that traffic that you've been buying now plummets. And you're in a worse position with investors where your growth is negative because you can't continue to pay to acquire users. So, buying traffic is a drug, but it will bankrupt you and then kill you, is maybe a strong way of putting it. But you want to try to avoid paying for traffic acquisition until you have a known business model, you've worked out your customer acquisition cost, and it's ideally less than your customer lifetime value.
All right, anything else to add there, Ashit?
Yeah, you're able to hear me, right? Thank you for answering that. I'd like to point to something that Paul Graham had blogged on. He said, do things that don't scale. Like I don't remember the blog properly, but it said, undertake manual efforts to acquire your initial customers. So that he had written, I think in 2013 or 2015. What has changed since then in the current age of fast-moving digital consumption?
Sure.
Do you have any advice to, as an early stage startup, I agree that spending money on paid ads might not be the best way, especially since we don't know what marketing message to spend on. So what would be, and also generating in-house content or curated content that the ROI may be long.
Okay.
So
right.
In the interim, what is something that an early stage startup who is looking to start their beta can do?
All right, we'll go into Paul Graham, whose late night tweets I love. It's and also seriously annoys me when US VCs sprout words of wisdom that are kind of truisms or just random, but do things that don't scale on its face makes no sense. But it kind of echoes what I said initially, which is do things manually, fake it till you make it. And so if you start by going, I need to have thousands of people come across my product. How can I be in thousands of places? How can we automate? How can we use AI and be scalable? You're solving a problem that doesn't exist yet. And having your team do things manually, whether it be write content or answer people directly or help people, on the back end while they're doing things on the website, these are the initial ways to go until you work out the pattern. So I don't think an intentional do things that aren't scalable is a desirable strategy, because you may well have to undo it later. But my reading of what he's saying is, don't focus on scalable solutions, just focus on making 3 people happy. And when you've made 3 people happy, then work on the next 10 people to be happy. And once you've worked that out, the scalability will work itself out afterwards, as opposed to your team, and often tech team who love building stuff will start building clustered servers and databases and all sorts of other things, but they're not solving the real problem, which is the user just wants to do a thing, order some tea. What's the least effort you can go to so that they can order some tea? It's not the long-term solution. The short-term is they order some tea and you go and put some tea in a thing and post it to them. And then you'll see whether people want your tea. And then you come up with a scalable solution afterwards.
All right.
All right.
And to defend my home country, Paul Graham is actually English.
Is he English? He's still on late night Twitter, but he's hanging out. Yeah.
All right. Good and topical question from Sean. YC and some other investors have warned that investment in startups will slow down in the current market situation. The valuations are going down and investment seems to have slowed down. What would you advise to an early stage B2B startup with early traction, but slow month-on-month growth and raising investment in the current climate?
Great question. And that's like a whole session just on its own. So I'll start with the maybe a couple of random things. Firstly, US valuations have always been insane. When you've got a SaaS business, software business, monthly users, recurring revenue, and so on, once you've got revenue, the valuation is usually seen by investors as a multiple of revenue. And in the UK, it's been typically sort of like 6 to 15 times annual revenue. So if you're doing £1 million a year in revenue, maybe it's between 6 and 15 million pound valuation, depending on the rate of growth of revenue. In the US, it used to be that way, but then a couple of years ago, it started going crazy. And you'd have valuations of 100x. So someone doing £1 million a year revenue, like £100,000 a month, has got a valuation of 100 million. And what's happened is there's been a big correction and those numbers have come way down again. And I think the UK numbers are down a little bit as well. In sort of maybe 6 to 15, it might be 5 to 10 or something like that annual revenue. There may also be less money available, as investors VCs might be focusing their funds on supporting their existing companies rather than putting into new companies. And if you have a lower valuation, then if you want to raise a large amount, you're going to be giving away more equity. So all of which is to say, at the Series A and Series B stage, where you have revenue and valuations are a multiple of revenue, I think things are more difficult. I think things are particularly difficult if you are living and breathing the stratospheric air of a Y Combinator startup, hoping for a 50 million valuation right after demo day. But dude, that doesn't happen in the rest of the world. So the fact that they're not going to raise, I think means nothing to anyone else. So as a startup in the UK, probably looking for angel investment, angel investors are not typically investing on a multiple. I think so long as angel investors have disposable cash, want to invest in brilliant companies, brilliant people, fun things to do, and have the potential for return on investment and get their tax discounts, I don't think anything will change. I think what will change is if bank interest rates go up and they've got less disposable income because the mortgage rate has gone up, or they can earn 8% from the bank, and therefore over 3 years, the risk reward is wrong on a startup. And then there is less SEIS, EIS investment available. And I'm not seeing any significant change on SeedLegals now that indicates that YC thing, that sort of doom and gloom shown there, really applies elsewhere. But that said, I think investors are wanting to see companies on a path to profitability. And talking to one of the investors from Octopus Ventures on the weekend, he was saying that some of the crazy speculative things, they just don't do anymore. They'd like to see that you are getting to profitable or have a plan to get to profitable. And if that's the case, then you're much more investable than somebody who isn't. And that means focusing your business plan. And maybe some startups are much better being able to do that. If you're doing a blockchain metaverse with no monetization in the next 5 years, maybe you'll tap into crypto funds, or maybe things will be much harder. Whereas if you've got widgets that you're selling and you can get to break even and beyond, you're more investable. So I think what you want to do is you want to firstly demonstrate to investors a path to profitability. And secondly, even if you can't raise the big round you wanted, that's what agile fundraising and seed fasts are for. Can you raise smaller amounts to either bridge to the round or get your product launched to get traction to the next step? But I think over the coming months, we'll see more of what pattern, if any, presents itself. But I think just like when COVID hit, it was probably in a sense not dissimilar. You want to prove to your investors that you've got a robust proposition that will withstand more difficult times. And if you jump out above others, then you're more investable.
All right, last question, and then everyone stick around. We're going to go over the Hotbed program for a few minutes. If your question wasn't answered today, it will be covered in the program. Not that we're trying to do a push there, but we'll get your questions covered. Okay, Julian, you have the last question. Really good one. It's, if you're looking for beta testers when you're launching a marketplace, should you focus more on the supplier or on the buyer side to test with?
A great question. And I wish I knew the answer for it. I guess it's going to depend which is going to be more important in your ecosystem, and also which is going to be the harder to find. So, I mean, if you look at, Uber, there are however many passengers per driver. When you go to their website, you'll often see on your website the importance of the two sides of the marketplace. So if most of the web page is where do you want to go today, they've obviously seen that it's the passenger, and if there are two tabs at the top going, I'm a driver and I'm a passenger or something, then you see they've split it equally. Mileage, sorry about the pun, is going to vary on each company. I think you'll quickly determine which is going to be the harder problem to solve, and it may mean that in each ecosystem, you've got existing forces that you need to disrupt. So in the case of Uber, you have to take people who either weren't drivers or were cab drivers and persuade them. And there's certain things that will get them to change that behavior, probably money and rides. And then the passengers, we've got a different set of problems to solve about trust, availability, app, and so on. So I don't obviously know the answer, and it's going to vary greatly. But I think Julian, being the data person, what are the things you would do to rapidly determine which of those you would focus on? And also perhaps which are the things in a sense you can buy and spend money on in a non-scalable way to solve. So to go with the drivers and the passengers, if you've got lots of passengers, can you start paying drivers beyond market rate to get drivers on the platform to prime the pump? And you'll bankrupt yourself long-term by doing it, but it may be the necessary thing to do at the beginning. So I don't know the answer for your specific use case, but hopefully there's some nuggets in there.
Perfect. Thank you so much, Anthony. You're welcome to stay on, or we'll all wave goodbye to you. Where can people find you and find SeedLegals?
So you can find SeedLegals on seedlegals.com. You can find me, Anthony, at seedlegals.com. And you'll find me on LinkedIn, Anthony Rose, and Twitter, Anthony Rose. So please, anything I can help with, let me know. If it's on SeedLegals, hit the chat bubble, and my colleagues are there to help. And if it's any questions related to beta growth and so on, pop them over to the Hotbed team, and they'll loop me in to see how I can help on any of those.
Perfect. Thank you so much. Everyone give a nice little Zoom round of applause.
Thank you, everyone.
Thanks, Anthony. Okay, everyone, I'll stop the recording now.